The company on our focus today is Gokaldas Exports, and the company's management is joining us now. Sivaramakrishnan Ganapathi, he's the Vice Chairman and Managing Director of Gokaldas Exports. Very good morning to you, sir, and thank you so much for taking the time out for this discussion. Well, a stock like yours has been in clear commentary of everyday news market commentary because of the kind of performance the stock has really given over the last few days. And, of course, the news flows have been pretty strong. You've been bagging orders, and that has been taken very well by the, stock markets too. At 769 odd currently, about 0.5% lower in trade. But, the gains for 2023 have been excess of 100%, meaning the stock has doubled so far this year. So, clear winner and wealth creator for all the investors. So, congratulations for that. I'll just first talking to you about the, latest agreement with the Attraco group is what I want to begin the discussion with. And I want to understand from you, which is a leading apparel manufacturer, $55 million is what you're going to be paying for acquiring at the Attraco group. What is the idea behind this acquisition, and what are the advantages that you're looking at? What would it really add on to your own company going forward?
Thank you and good morning. Attraco group brings in certain capabilities which we don't have. One, it gives us presence in low-cost geographies. So currently all of our manufacturing units are in India, and we were looking at expanding, but expanding where the local geography would ensure that we have a sustainable advantage for next 10, 15, 20 years. So this group has got manufacturing facilities in Kenya and Ethiopia, where the cost of manufacturing is expected to remain low because of the wage rates there. Secondly, these countries enjoy duty-free access to US and Europe. That's a big advantage, as there is a huge arbitrage there. Kenya goes duty-free to US. Both Ethiopia and Kenya go duty-free to Europe as well. So that's another plus point. The company has customers which are complementary to us. So there's only one overlapping customer. Otherwise, all the customers are different. So which allows us to cross-sell to one another. And it's a very well-run management. It's been around for over 3 decades. So the learning curve has all been baked into the performance of that company. That if we go and set up something fresh and new in those places, we will take at least 5 years to get a grip on the business and get a grip on operational efficiencies. Here we have something which is running very well. So it met multiple objectives for us, and that's how we ended up doing this.
Perfect. So, how are you looking to fund this acquisition? Would you be also looking at taking any incremental debt for Attraco?
Yes. So at the moment, we are a debt-free company. I mean, we have net cash on the books. However, for this acquisition, we intend borrowing about $40 million US dollars. The balance, that's 15 million, will be paid out of our internal accruals. So that's how we want to conclude this deal.
Okay. Could you also tell us, what is the current utilization level of the company, and do you plan to add any capacities going forward as well?
Sure. So they are currently at about over 85%, and we expect that to go to almost 100% by end of this year itself, looking at the order book. And we intend to add capacities going forward. So over the next 3 years, we would like to see about 25% plus growth there. And towards that, we would add some capacity. There is one new factory that they had established, and we believe that there is an opportunity to increase capacity in that factory, as it is it's not fully laid out. There are a lot of machines that we can put in that unit. So that will drive our near future growth.
Okay. After the Attraco Group's acquisition, what is the margin outlook that you have for this acquired asset and on a consolidated basis for your company? If I can ask you for FY24, what's the outlook, FY25?
So Attraco's calendar 22 margin was about 10.5% EBITDA margin. We believe that in about 3 years we can improve it to over 12% in line with our EBITDA margins. So it will require some amount of upgrade of plant and machinery, some amount of capacity growth as well, and all of that will happen over the next 2 to 3 years. That's our trajectory.
Okay. Also, if you could tell us what is the peak revenue potential that you can look at for this acquisition for, say, FY24 and the coming years as well, FY25, FY26?
So FY24, the acquisition has just been, we have entered into agreement, so just been signed.
Correct.
But by the time
Correct.
that the acquisition will take effect, after all the regulatory approvals, we expect that to happen towards the end of this calendar year. So
Okay.
effectively in FY24, we may have very, very little revenue for the fourth quarter only coming in, or partly third quarter and fourth quarter. So if I look at FY25, I anticipate that the revenue from this asset should be in excess of 100 million, maybe 110 odd million. That's what we are gunning for at the moment.
Okay. So, for your own internal targets, if I can ask you, if you've set for yourself, I think for Q1, the profit and the revenues were slightly down in about 15, 17 odd percent. The revenues were somewhere around 514, 515 odd crore rupees. Do you have an internal target for yourself, maybe over the next 3 to 5 years? What is the kind of revenue that target that you want to reach to?
So I'll separate this question into two parts.
Yeah.
One is the quarter-on-quarter part. So if you look at our numbers over the last 3 quarters, that is Q3 and Q4 of last quarter and Q1 of this quarter, we've been fairly flat on a linear sequential basis. And the reason is that the markets have been tepid. We export to United States primarily, and the other major countries are in Europe. So both of these markets were beset with inflation, and there were excess inventory with the brands that buy from us. So that softness in market continues. We anticipate this to continue into Q2 as well. And post that, from the third quarter onwards, based on the trajectory that we are seeing from an order perspective and the inventory position with the brands, we are seeing a year-on-year and linear quarter-on-quarter growth. So the order book kind of supports that. So I see that from FY25 onwards, that's 24 to 25, we should be back to that 15-20% YOY growth. In FY24, I think because the first half has been facing quite a bit of headwinds from demand perspective, we see pickup in the second half in H2 of FY24.
Okay. Sir, I also wanted to understand, what is your own sense of the industry's growth, the demand trends that may follow? We are at the onset of the festive season right now. There's a lot of excitement around, additional events. We have the G20, we have the World Cup happening, we have the, a beauty contest being taken place. A lot of big events taking place in India that may again raise awareness about, Indian culture, Indian heritage, and of course, apparels is one of the industries that may get, people talking about it and interested about it. The tourism space that is getting excited, and of that, with that comes a lot of shopping, and of course apparels make for that as well. I wanted to just you to paint a picture for all our viewers. What is the sense of the demand trends going forward from here amid the festive season? Where is the industry placed at, and in the long term, where does the apparel industry really look at growing to?
Sure. So we are an exporter. So we really look at markets, particularly the Western world. We export to rest of Asia as well. So events in India can only give a positivity from drawing attraction to suppliers in India. But we are not really dependent on Indian market in that sense. So coming to what I see as industry trends, the good news is that industry continues to grow. Globally, the population is growing. Particularly, industry in Asia is growing. So demand in Asia will keep growing. Indian industry itself, Indian apparel demand itself will grow by 9 to 10%. So that's a good upward traction that you can see. Now, from a supply side perspective, it's very interesting. So China is a very, very big supplier in the $500 billion apparel market. And China's cost of labor has gone up pretty significantly. It's well over $500 a month. So that's very expensive, and the availability of labor is challenging. And this is also becoming an issue in Vietnam, which is another apparel exporting country. So the high cost regions will eventually shed business, and that's happening. And which countries can pick that up? Bangladesh, India, maybe Indonesia. Indonesia is also expensive, and that is one movement we are seeing. Second, government of India is talking of FTA, and we are in negotiations with United Kingdom, Canada at the moment, and maybe and even European Union as well, though that is some time away. So if let us say this FTA happens, that makes our goods far more competitive. Today, Bangladesh goes duty free into UK. If we get a duty free access into UK, that brings us at par with Bangladesh and 12% cheaper than China. The 12% cheaper than China is significant. So there is a huge opportunity that will come to Indian apparel manufacturing industry. So there are such tailwinds which are forming in favor of India, and I feel that that would result in a lot of Indian capacity creation and growth for Indian apparel industry.
Wonderful. Sounds very good at this point in time, and we hope then these tailwinds definitely fructify for the Indian apparel manufacturing industry and companies such as yours. Not many people would know out there. From our viewers' perspective, I just want to tell them that, you know, if all of you have been spotting brands like Gap, H&M, Adidas, Puma, or even Zara, there's a good chance that Gokaldas Exports has manufactured all of these clothes as well. That, you know, take a U-turn and come back to you as well in your wardrobes as well. But that goes to your kitty, since Gokaldas is the country's largest exporter and manufacturer of branding clothes. You've struck gold, most of the experts say, with the latest acquisition of Attraco. Are you looking at any more inorganic opportunities, since you do have net cash on your books right now?
So it depends on the opportunity. You know, we're not actively seeking it at the moment. If something comes by, we will evaluate. But at the moment, no, we're not actively seeking it.
Okay, understood. Well, many thanks then, sir, for being with us on this special edition and discussing with us the insights about your business, the you know, growth opportunities that you're looking at. All the very best to you for the coming quarters as well. And here's hoping for many more interactions to understand, you know, how the industry is also shaping up as well.
Thank you so much.
If you like the video, do like, comment, share and subscribe.